Hi, this is Randy Finney with the right side of the chart, and this is a mid-session update for Wednesday, August 4th, 2021. We're going to start out with a very brief update on the markets, should be under a minute or less, because there's really nothing new to report. And then I want to touch on some of the various trade ideas that I've been covering lately, and we're going to go roughly in this order. We're going to look at crude oil, natural gas, gold, which will include analysis of the euro and US dollar, lumber, corn, wheat. I want to do an update on coffee. There were a few questions the other day, and I posted some support levels on coffee and analysis. AMC and DM, those two individual stocks, been covering recently. All right, so the reason the equity market analysis will be brief is there's nothing new to report when you're grinding around sideways. So that's it. Here we are. This is the box that I just drew. I'm watching. If we do break to the upside, as I said yesterday, we're gonna still, if it's just a marginal new high, it'll still be a divergent high. And if we break to the downside, then there are divergences, or were divergences in place at this most recent high, and that would most likely be the catalyst for a correction there. Okay, had to pause the video there for a sec, but that's that. So we'll watch that. Let's not spend any more time on that. See which way these ranges resolve. QQQ, same story. Just really focus on the large caps right now. That's it. Going sideways here. 361.80-ish is the recent support level right there we need to watch. And again, same story. Any new high, should we get it anytime soon, will simply be an extension of the divergences that are currently, or will have divergences, I should say. That would be a divergent high. It would look like this. So, and therefore, it could also be another back test of the trend line there. So, again, keep in mind, right now, much better fish to fry elsewhere. So let's talk about those fish. Starting with oil, crude oil, I'm going to look at the futures and an ETF for you on this one, or an ETN, I should say. Again, one of my favorites right now for both near term and longer term. I think there's a lot of longer term potential as maybe a trend trade, and I'm talking 30+%. Swing trades near term, few days, weeks. We've already had a nice swing trade out of it. That was our sell signal hit there, support bounce, wedge. I covered this many times, but here we go. Yesterday we were right here, back testing that 70.42-ish former target right there. It was hit there, it was hit again, then we broke it. A lot of reactions around it, and so that was your objective shorting op. And if you took it, crude's down 3.5% today. So again, on a single day, that's more than what the market's gone up or down in weeks now. And these are your next target zones. Probably come all the way down here. These both 66 and 65, and we'll watch and see what kind of divergences form. And I'll also plan to study, zoom out to the longer term charts and maybe give you some additional downside targets. But if you're an active trader and you just want to cover, then this would be your likely target zones where you can get out. And if you're a longer term trader, and you short it, right here or anywhere along the way, or even here, you just periodically trail your stops down and let it run. And if you don't trade futures, there's several ETNs out there. One of the more actively traded is USO. You could this is a 60-minute chart, so there's your trend line break, sell signal, kickback rally. I had more lines on the on that futures chart because that's my preferred trading vehicle. And remember, if you don't trade CL is the the standard, or been around forever, the original contract for crude futures, and still most liquid. But then you have other ones like I think it's MCL. Don't hold me to it. And then QM. There are two different ones. MCL, if I'm not mistaken, is micro crude futures. QM are the minis, I think. There's different ones. QM's a little bit bigger contract size than MCL as far as a leverage factor, but they all trade off those same levels. So you can use my futures charts, and you just have a smaller leverage factor. So you're not, let's do a lot of things. Be more diversified if you have other positions, or layer in, scale in. And then, of course, USO, you can short USO. These are targets. I think I had covered these before. 45.68. We already hit that target there. That was an initial target. Probably should add, and I could add, and I will add actually a level that I see right here, likely to get a reaction: 43.41, 41.68, 39.54. So those are some near-term swing or trend targets for crude. via an ETF that, or ETN, excuse me, similar but not exactly the same, that you need to short. Or if you don't short, or let's say you want to go, have a short position in an IRA account, you can, by the way, if you have an IRA through certain brokers, interactive brokers, you can short futures. A lot of people don't know you can do that, but you can. You can't short stocks. That is, the SEC prohibits that, but I think it's SEC. But either way, you can, if your account's approved for it, and go short futures contracts in an IRA. Or you can buy things like SCO. This is, I believe, 2x short leverage ETN. You just go long, and this is what it looks like here. SCO is the inverse crude ETN. It's been building these big divergences, positive divergences. Remember, you're basically looking at the crude chart upside down. And we had a trend line here that was broken out recently, ran up, hit 21.58. That was that first target, comparable to that first target I showed you, or the target that was hit on the 60-minute charts of USO and CL. And that would be the next stop again. From there, we pulled back. You're going to have decay on these. You typically don't want to, hold leverage ETFs for an extended period of time unless you get a really strong move, unidirectional move, I like to call it, where, for example, in unidirectional move in crude, we'd be looking for almost all red days, down days. That's the important thing. It's when you go back and forth and chop around, that's when the decay is worse in these leveraged ETFs. So levels to watch or to target: 21.58, 20, again unadjusted. These are actual resistance levels. That's 24.94, 26.47, and 30.85. I do prefer, even if you're going with this one, I like to use the charts of the futures. I recommend you do that as well. Even if you don't have a futures account, you can get free real-time quotes at places like investing.com. If you have an account at, let's say, TD Ameritrade, their Thinkorswim platform will give you free future real-time quotes on futures and charts and all that good stuff, so you can replicate that. All right, moving on to the next one. That would be natural gas. That one is not so far this time around. Usually bat a pretty good batting average on nat gas trades, but this one's not worked out. I added a few lines here, but I most recently mentioned it as a short on a break of this trend line. And again, I did add lines because we had a reaction. If I'm not mistaken, I had a target down here or here, and we reversed a little shy of that, and then ultimately this trend line. Now we may still get there. These are still support levels from below, but what happened today is we took out near-term resistance. I had a few reactions here, and here, and we popped it today. So here's the thing. If you shorted it on the breakdown, that's right here, you're relatively not far underwater. When I say relatively, natural gas, if you've traded it before, you know this. It moves. It can move 10% or more in a day. So you've got to give it your room on your stops. Your price targets are going to be above average in percentage terms, and therefore your stop loss orders need to be. And how do you manage that effectively? You don't take a big position. You take a smaller position. So I might put half into an dollar amount into natural gas as I would into, let's say, Apple, if I'm trading Apple, something like that. And that will allow me to use maybe a 10 or 15% stop, or even a 20% stop loss if I'm shooting for 40-50% or more on the trade. It all depends on my target. So where we're at right now, negative divergence in place, and it is not what I call confirmed divergence yet, because these indicators, they're pointing up. They're momentum indicators, and if they keep going up, then you no longer have divergence. However, should this pop just be a stop clearing pop, marginal new high, we reverse soon, and what I'd want to see to keep this trade alive is a solid break back down below this level here where we popped today. There was our little breakout, and by doing that, we would turn these indicators down and then have a pretty big divergent high here, and that would set the stage, I believe, for a move down to let's just say a swing target would be this uptrend line. Also, that 374 I think is a good target level as well. So kind of hanging in there. Depending on who you are, you may be stopped out on that one, or you may still be in it. And for those of you that prefer ETFs, you have, or ETNs in this case again, usually it's going to, not always, but usually securities that track commodity futures are ETNs typically, and ones that track baskets of stocks, indexes, etc., ETFs. For all intents and purposes, same thing. It just has to do with the taxation of those in the forms that come out. UNG is the natural gas ETN, and there it is. So you do have some divergence on UNG on the 60-minute chart, and there's a trend line as well. So if you want to wait for break of this trend line, minimum target 1314, then 1250, 12. Well, I'd have to tweak that, but I just to kind of I'll do an update if we get a sell signal. Let me again replicate that trend line there and watch that, and I'll even set a price alert to remind me. Okay, so that's what we look like on the 60-minute chart of UNG, natural gas ETN. Next up, gold. Still like gold, but gold had a smackdown this morning. We had the ISM Services Index roll out. You can get this on the site, on the top of the site under Resources, the main menu. Go down to Tools of the Trade, and you'll see a link to the economic calendar. And so at 10 a.m. today, they released the ISM Service Index. Came in real hot. That's bullish for the economy or for the market and for the dollar. That's what happened. So the consensus was 60.4. The range was 58 to 64.4. Came in at the top end of that range at 64.1. And what that did is it caused a spike in the U.S. dollar immediately, and that spike in the dollar resulted in a comparable drop in gold. There it is. So there was the release right there. There's 10 o'clock. Those numbers came out, and so that's what's going on with or what caused that pullback today in gold. Now I like it. I'm a buyer of gold at that point. I think it's a buy. Go back. Let's go to a hourly chart of the U.S. dollar futures here, and you can see we are still in a downtrend. So this was just a blip. There was that spike this morning, but the bigger picture is that bearish rise and wedge pattern I recently highlighted, breakdown back test. We've been walking lower. We're in a downtrend, and I still think we'll continue lower. If we rally a little more, you're going to have a downtrend line here, which we're actually, we're close to it now. So there it is. There, right on it. So this is I think a good time to buy gold right here. There's also some price resistance there. Again, I'm looking at the dollar, but the dollar and gold go inverse here. And we'll jump over to gold, show you that. GC, there it is. You can see that. We'll go down to 1 minute chart. And that didn't work. Let's go down to today. There it is. Okay, so this is today. There's that when the dollar ripped, gold sank. Almost directly proportionate and right at the same exact time. There's 10 o'clock right there. So that's what happened, and what it did, it brought us back to the support level. And so that's why I think gold's a buy. This is a level right here. Former first target is this line, 1807, almost 1808, right there. So, and remember, we were also at resistance. This has become even a bigger resistance level now, and that's that 1837.60-ish level I've had on this chart for a while. T2 was T2 zone, one of these two. T2 was originally here. We overshot a little bit, but that's 1, 2, now 3 distinct reactions. So that makes that an important level. No guarantees we're going to go up, but I can tell if you want to hold off, I like to buy pullbacks to support, and if it went down here, I'd still like it. I don't want to see it drop below this range. That obviously is not going to be bullish, but while a breakout above the range most certainly will be bullish. T3 right there at 1852.60-ish, and then T4 zone at 1876 to about 1880 right there. And I keep showing you charts of the dollar futures and euro futures recently, and we can also every now and then, I like to go and look at the euro USD. I'll watch it every day and I'll cover it in every video. And so you have this. You have actually one more trend line. Let me just add that. There's another trend line off the top right here. Right there. So we had this little bullish falling wedge right here recently that the euro US dollar broke out. Remember, this is the euro against the dollar. So when this chart is going up, that's bullish for gold, and when it's going down, that's bearish for gold. So recently we've had that rise in gold where my first two targets were hit, and then we ran into this resistance today. I had the line at 119 change. A little pullback there, but you're still coming off that divergent low. So I think this is just a little corrective wave within a new uptrend, and that's a daily chart. Bigger picture and why I remain long-term bullish on gold is this. This is a long-term weekly chart, and the euro US dollar, as I mentioned back here, recently broke out. This was a breakout of a multi-year, decade or more downtrend lines. We broke out, made a successful back test. We've had two runs at this level here, about 122.6 or so, and that's the level we need to break out. So we've been, since the breakout, consolidating. We did have a little divergence, and so longer term, if we can take this out, that's going to be bullish. It should take us up to these next targets, and should that play out, it will almost certainly be a tailwind for the trade in gold. Okay, this is a long-term chart. We're going to look at lumber real quick. Weekly chart, and this goes back as far back as lumber futures can go. They don't. The history I have on them doesn't go back much beyond 2007. And up top, this is right here, the S&P 500. And you can see the S&P 500 peak. We had the great bear market back from 07, 09, and lumber fell. Lumber, because it's used, big component for building houses when the economy is strong or rising or solid, lumber prices are going up right in line with the stock market. Up, and then they peak. And they both correct, and so there's a very strong correlation. It's not a direct positive correlation all the time. Here was a correction in lumber when the stock market continued to grind up, but that was also a harbinger of bad things to come. That was a multi-year correction right there. Doesn't look like much because on this chart I have these overlaid, but then again, lumber rallying, stock market rallying, both correcting. Both plunging down in the COVID lows right there, and then after COVID, lumber taking off and the stock market taking off. This is the biggest disconnect by far I've ever seen. I highly suspect, I know there were a lot of speculators, lumber got ahead of itself. I fully anticipated a very big correction coming. Because that's what lumber does when it goes parabolic. But I think the government stepped in. I don't have any evidence of that. I haven't really read up on it, but I know that the Fed was overly concerned. They were getting a lot of pie in their face with the super hot inflation numbers coming in lumber. That was a big component because that affects housing prices. But I don't think things can be artificially contained so forever. Plus, big drop, 70% drop. We're still off the lows in lumber. I'm not liking the price action today, but longer term, I went over the charts yesterday and showed you we had that bullish PPO crossover yesterday, so I still remain bullish on that. I think the downside's minimal. Here's what the futures look like. Again, we're kind of floundering around. One thing I can say is that we were in a strong, very strong downtrend correction mode, and that again was anticipated in advance because that's what lumber does once it goes parabolic to the upside, as it did up until about 3 months ago. So we were falling, and the momentum has changed. We put in a divergent low. We're moving up. It's if and when we take out that first target, which was already hit, then we'll have the early makings of a new uptrend. So we need ideally to see lumber reverse soon. Again, doesn't have to happen that way, but if it does, that's going to help support the case. We're making a series of higher lows and higher highs if we can take out this high, and that should open the door for T2 855.25, and then T3 934. But again, kind of just floundering around lately. Down today, down about 7%, but that's par for the course on lumber. It tends to move up and down, and high single digits. That's what it does. It's kind of like natural gas, very volatile. Okay, that brings us to corn and wheat. Wheat broke out the other day, and as I said, I'm favoring corn. That's my proxy right now because I think corn has been lagging behind and will probably play a game of catch up to the upside, or likely fall less if that breakout fails. Either way, we have support here around 544. I've added this line here. This is recently where corn's been pulling back to, and like a lot of things that I've highlighted in this video, there's a trading range recently. We need to break for the bullish case, obviously, break above it. If it breaks much below it, then that's not going to be bullish. That'll be bearish. So there we are. We're still at support around 540 to 544. We'll call it, trading at 548 right now. And minimum target will be a swing to the top of that range again around 558. And then up here, T2 568 roughly to 572, 582, and then 595. And CORN was also made, the case was made for, swing trade there if you don't trade futures. That's the ETN for corn, and you just want to buy it close to this trend line. and or that 1917 support with a stop somewhat below, because if it breaks both these levels, it's probably going to come all the way back down here to about 1744. Resistance is up here, which could be a potential target, about 2270, and then that's a bigger trading range. You box that in, and that would be bullish if we can take that out. So there's corn, wheat, same thing, WEAT for the ETN. There was our last buy signal mentioned here on the pullback to the trend line, and that played out, and we were able to exit that trade right there using the futures. It pulled back and recently broke out, took out that high. So still looking good. I still like wheat and corn. This is what it looks like on the 60-minute chart. Not super crazy about. It's a minor trend line, not a lot of tags. Little divergent high. Sometimes or quite often in a bull trend, wheat and these commodities will shrug off these divergences. But what we need to see, again, ideally, because this was our breakout the other day, about 717 and change, I want to see that level hold. So right now, this is still a breakout right here. One back test, as I mentioned the other day, yesterday I believe, and then another back test today. And yeah, so if we can hold that breakout, and as I said yesterday, even if they whip it down a little bit, that's not unusual. They come and clear the stops, run all the stops before they take it up higher. Okay, in one of the comment sections the other day, somebody asked about coffee. They asked about, well, a couple questions. One about Joe, one about Joe is the ETN, and then KC or coffee futures. Here's my support on Joe right here. That runs from about 46.13 to 46.79. So that would be an objective long if we get there. This does resemble and has an appearance of a bearish pennant. You had an impulsive move down, forming a pennant right there, and the projection would take you down closer to this next support. You have maybe support runs from about 40.70 up to about 42. That would be the measured target, so don't fall in love with it. However, these things sometimes, if they break out, look, if I were to short it, and I don't care to because the commodities are in a bull run, I wouldn't hold out for that entire measured target of the bearish pennant, excuse me, because that's good support. If it breaks to the downside and you want to get a quick trade, I think that's all that's left in there, and that's just not enough meat on the bone for me. It's only about 5% below, and it's also again an objective level to go long with a stop somewhat below. KC is coffee futures, and you can see we recently had a hell of a run. Put in a divergent high. Nothing goes up forever. You get overbought. You put in divergences. You're going to correct, and that's what we did. We corrected. So there's that flagpole type action, a little flagging type action there, but pretty good support coming up. This is 168.46 to 164.96. That's a support zone. So we'll fill that support. Should that break, this is my next support zone all the way down here, 49.32 to 147.43 right there, good support. So, let's just say you took a shot there, you get stopped out, or you want to hold off and you think that flag will play out, then that would be a really nice buy right there. If the flag does happen to break down and play out, that would be roughly your measured target and a great place to cover a short and or go long if we get there. Okay, and now on to a couple of the stocks that I've been highlighting lately. Again, with the stock market flattening out and kind of grinding around, going nowhere, I'm not seeing a lot of great setups, but this one of my favorite, has been for a while. AMC, break down here, the triangle pattern, T1 and the uptrend line were both hit, and then there's that 36 support on the daily. I have it at around 33 on my 60-minute chart, but we've taken that out. See, we're at 30.14. So both my support levels are taken out. And that was a break of the triangle pattern, this larger triangle pattern here. And again, a very objective short entry today as we started to move down through there. And this one's down currently 10.27% with, in my opinion, a lot more to go. So that's AMC. Clearly the next sell signal has been triggered. There it is. There's that 33 level I gave you yesterday. There's the triangle, which we already broke. So that was one objective short. And now price support, which was just below, has been broken. And barring a stick save, meaning a big reversal back above 33 and change, this one appears to be headed lower. And on the 60-minute chart, my next target's all the way down to 1458. So that would chop it in half from where it's at. You'd have over a 50% drop in AMC if my next target's hit. And DM not playing out as so far as I would hoped it would be, because we have earnings coming up in a few weeks here, but thought we had enough time. We had a divergent low breakout right there. I mentioned it after that, and then we put in this marginal new low, so it's still very much an active trade. First target right here almost hit. Second target, third, fourth, and a potential fifth target. But we're in this little wedge pattern now here. The divergences are still intact, so it still has potential. We just need to get going here, and I don't know if it'll do that as we get closer and closer earnings. They report on or around August 16th, so maybe in a holding pattern. However, what I suspect, if the charts are going to play out, then that may be the catalyst right here. There's the line for earnings, give or take. And so, if you want to roll the dice, hold this one in earnings, it could go either way, obviously. And a stock like this will probably gap up or down following earnings. So keep that in mind. I just want to do an update on it and tell you that the technical case can still be made for a long position here in DM. All right, and that's it. And that's quite a bit of securities covered in 26 minutes. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.